This is Charmaine, your trainer for tonight. So as we wait for more people to join us, the numbers are increasing. So let me just do a brief introduction why this tonight's webinar. So recently, many people have asked me about how to make a living out of trading. So more so during this period of circuit breaker. So therefore, I put together a webinar, and I'll be discussing how to jumpstart this trading journey by breaking down the main elements of trading the markets. So there's a difference between investments and trading for a living, which I will show you in detail later on. So the main difference lies in the strategy that you use. Most of the time, investments, you are looking at yields per annum. However, for trading for a living is different. The strategy that you use is different. The mindset that you use is also different. So before we begin, if you can hear me well, please type yes into the question box. So during the webinar, if you do have any questions, just send them in, type them in the question box, and I will keep my eyes on them and address them from time to time. Okay. Okay, seems like yes, thank you so much. Thank you for responding. All right, great. So looks like everyone can hear me. So let's begin tonight's webinar. So for the benefit of those who are listening to me for the first time, allow me to do a brief introduction of myself. I'm a licensed representative with MAS and have been in the industry for more than 10 years. So during these 10 years, I've experienced many types of market movement and how trading has dramatically shifted when I first started as a rookie till now. So when new investors or new traders, when they come to me, first what I would do is that I would assess their investment portfolio, as well as study their risk appetite and recommend trading strategies that will match their lifestyle. So traders would discuss about their strategies with me, and in the process, I can spot loopholes and potential pitfalls if I see that they have invested heavily in one basket. And also, I have twice a month live coaching session with my traders where we will meet and discuss about the current market situation and what type of techniques that they are employing to manage their portfolio. So as you know, during these months of circuit breaker, I've been doing Zoom meetings with my traders, and yes, have been getting pretty good results when they apply the techniques that we discussed during the meeting into their trading strategy. So for those who do not know who we are, Phillip Futures is a member of Phillip Capital Group and is one of the founding clearing members of Singapore Exchange Derivative Trading. We have since grown to become one of the region's top brokerage for trading global futures, commodities, forex, and CFDs. So if you have any interest in any other products that I do not share tonight, do contact us and we will see how I can assist you in fitting the product of your interest into your trading portfolio. Okay, so let's get down to our training proper. What is micro futures? So why is it so popular right now? You might hear from your friends who are looking into micro futures. So currently there are 4 types of micro futures products offered by CME Exchange. CME is Chicago Mercantile Exchange in America. So there's the S&P 500, Dow Jones, Nasdaq 100, and Russell's. So what is micro futures? Essentially, they are micro versions of the regular size contracts on CME. So to give a visual example, the blue table represents regular size contract, meaning every 1 point movement for Dow Jones is $5, every 1 point movement for S&P 500 is $50, and every 1 point movement for Nasdaq 100 is $20. So micro futures is the micro versions of the regular size contract. So it means that it's scaled down to 10 of it. So for every 1 point of Dow Jones is 50 cents, 1 point movement of S&P is $5, and then Nasdaq 1 point movement is $2 instead. So a dollar and cents example is on the average daily movement for Dow Jones is, say, 150 points. So this would translate to $75 profit and loss for micro contracts as compared to 750 for regular contracts. So the main difference between micro and regular futures lies in the size of the contract. Now, moving along, I will show you which companies are the ones that will move these indices. Shown here, first one is the top 10 companies of S&P 500. Now, even though S&P 500 represents Fortune 500 blue chip companies, the main movers are usually these 10. As you can see, financial institution is one of them. Next on the list for the top 10 companies for Nasdaq. Now, Nasdaq has about 3,000 technology companies listed on the Nasdaq Stock Exchange. But the main ones that usually move Nasdaq are these. So you'll be wondering, how come PepsiCo is in it? Well, PepsiCo has already evolved from just beverage, food and beverage, to creating infrastructure and technology. And they have been one of the biggest technology in terms of infrastructure. So therefore, they are in the top 10. Next is top 10 companies for Dow Jones. These top 10 companies are included in S&P 500 index also. So therefore, you can see that the movement between S&P and Dow Jones price movement, they do move in tandem most of the time. Occasionally, they deviate. Okay, so far I have a question posed in the question box here. So one of the audience is saying, what is a futures contract? Okay, futures contract is offered by futures exchange, and the futures exchange will state the specification and the terms laid out by themselves from the CME per se, if we are talking about S&P 500, Dow Jones and Nasdaq. So let me pull out this table and let's go through this in detail. Okay, so this is the one. All right. Yeah. Okay, so we have covered earlier that the contract size is the main difference between micro and regular futures. Once again, we see here to calculate the full contract size of micro S&P is $5 multiplied by the current index price, say for example 3180. So which means that the full contract value is USD 15,900. Now, to initiate a trade, you don't have to pay upfront USD 15,900. CME Exchange, they require just 10% deposit of the contract value. So currently, the margin required by them is about USD 1,300. Okay, so once you close out this position, then CME will return this deposit back to you. Okay, so what you take is just profit or loss. Okay, over here, trading hours is according to Singapore timing, 6 a.m. to 5 a.m. If there is any daylight saving, we will also inform you. Price fluctuate per quarter index point for S&P and Nasdaq. So to make calculation of your profit and loss easier, we will multiply it to 1 point value. Next is commission per site is $3 per buy or per sell. Okay. However, Phillip Futures has recognized the popularity in trading micro futures recently and have decided to run a promotion to reduce the commission by half as a support for this group of micro futures traders. Okay, so next is the contract months. The contract months are very easy to remember. They are quarter months. So it's March, June, September, December. So which means that now we are in July month. So this will be, traders will be trading the September month contracts. Okay, so there's no physical delivery of the contract for the indices, and the index will end their trading month on the third Friday of their contract month, meaning S&P 500 will stop trading the September month contract on the third Friday of the September month. Okay, it's like a handful of information over here, but don't worry, I will go through with you step by step when you open an account again. All right. Okay. Now, next is we have covered what is micro futures. Now let's look at why trade micro futures. Okay, so why trade micro futures? Is because they are indicators for the US market. Index represents the health of US markets. For example, in Singapore, what do we have? We have STI, our Straits Times Index. So on a daily basis, STI will report whether it's up or down, and this will determine our economy's health for that day. Okay, and second reason why trade micro futures is it's always recommended and safer to trade a basket of companies rather than individual companies. So one bad news can really send the stock price of a company into zero overnight. However, when you trade an index, the movement of that stock in that index is cushioned by the performance of other companies. Okay, so a brief introduction of what is S&P 500. So S&P 500 consists of 500 blue chip companies and is based on market capitalization, liquidity, and their industry sectors. Dow Jones is made up of 30 public listed companies. The value of Dow changes when one of the component stock has a stock split so as to generate a consistent value for the index. So these 30 companies are also included in the S&P index as mentioned. All right, so next, the makeup of Nasdaq is also by company capitalization of the market. It consists of the top 100 technology companies out of the 3,000 stocks trading on Nasdaq Stock Exchange. So they do not have any financial companies since they are put into a separate index. Okay, so now the third reason is the ability to trade, to balance your trading portfolio. So what do I mean by that is that previously traders can only trade the regular size contract, the big, huge contracts. However, with micro futures, the key benefit for this type of traders is that they can hedge their position with the micro contracts. And in that way, it reduces their risk exposure. Over here, since the launch of micro contracts, CME has registered 11 million contracts traded during the first month. And 1 year later, we see that this figure has exponentially increased when traders discover how close the price traded on the micro contracts as compared to the regular contracts. The key benefits of micro futures is the ability to enter markets that were used to be really expensive. For example, to trade S&P 500, it is USD 13,000. But now with micro futures, it is just 1,300. So this makes it easier for new traders who were uncomfortable in putting up so much capital outlay in the first place. At 1/10 of the margin required, new home traders can tap onto the market opportunity available that was once closed because of the high entry costs. So let's do a recap on what I've covered so far. What is micro futures? Micro contracts of the regular size contracts. Okay, and I've covered the components of S&P, Dow Jones, and Nasdaq 100, and the contract specification. And I also covered why trade micro futures, the ability to limit risk exposure, hedge position, and to find out whether if you really is interested in embarking this trading journey, because you know we do understand that you don't want to come out so much money, but yet you want to just try and see whether this really works out for you in the long run. Okay, so are there any questions on the topic so far? Just put in the question box, and I'm watching on it, so just give you some time. to just key them in. Okay, Silva ask, is this similar to DLC? No, it's not. Futures contracts is not totally. It's a different, I would say the nature of DLC and futures contracts are totally different. If you have a list of questions and would like to discuss in depth with me about balancing out your portfolio or just to check whether these products are suitable for you, please feel free to drop me an email at tanshermaine@phillip.com.sg. Okay, so moving along, you might be thinking that, okay, so far you understand what I've been saying and what is covered. So what else do you really need to know before you jumpstart your first question? First trade. Okay, I have some questions here which I will gather them later on. Okay, so as a trader myself, when I teach and coach, I will drill two areas into every new trader. These two areas need consistent work and research throughout your trading journey. Okay, what are the two areas? Is fundamental analysis and technical analysis. So now you can actually take down some pointers on your notebook. What I'm going to share is for what kind of background research you need to gather when you form your fundamental analysis. Okay, number one, you have to know your news. First thing when you wake up in the morning, go visit your Bloomberg, your Market Watch, your writers. Okay, what are the breaking news for the day? Which basket is moving? Is it equity indices, commodities, or currencies? So why is this so important? Let me illustrate a recent market situation. Around in the middle of May, WTI crude oil in NYMEX suddenly traded in negative pricing. I'm not sure if you are aware. And this news grabbed the headlines for at least a week. So why is that so? It's because economies all over the world are analyzing the possibility of the spillover effect of this crude oil onto related oil companies. So as you can see just now, S&P 500, there are a few oil companies listed over there. So this will possibly affect the index price also. So therefore, when you read breaking news, you need to get your mind working. Okay, what is it affecting now? If WTI is in negative, how will it affect? What is the repercussion and the consequences? Okay, next is which markets are affected by the negative oil price. For example, did it affect SGX? No. What about Hong Kong exchange? No. It only affected the American exchange, which is CME. Okay, so it's very important that you know and localize the markets as much as possible. Third piece of research together is economic data concerning the product you are trading. So I will elaborate on this in a while because it's quite a bit. But let me just explain on the type of market report I provide for my traders. So, you know, as new entry home investors, new traders, they always very jittery about, you know, okay, fundamental analysis, what do I need to do? What books do I need to read? And things like that, you know. So I understand all that, you know. So on a daily basis, what I do is that I will gather all the breaking news and piece them together, plus analysis of what's going on currently and what possibly would happen in the near future. Okay, and then I will just email them out to my clients and just to help them in their fundamental research. Okay, so in that way, you will understand that, oh, you know, you don't have to worry about, you know, oh, there's so much things that I need to know. The learning curve is so steep, because it is quite frustrating when you first start out. I understand that because I was a rookie back then, so I know. So, and with this market report that I send out on a daily basis, traders have feedback that they are able to learn faster through my market reports, and they know how to sift through the important economic data pertaining to their product that they are trading. Okay, so now back to gathering economic data. There are tons of data out there on a daily basis. So able to sift through the data and pick the important ones will help you to be more focused on your trading strategy. So for tonight's discussion, I will be highlighting the key economic data for trading the American index, for S&P 500, Dow Jones, and Nasdaq. Traders need to know the number one most important data is jobs data. This refers to US jobless claims, which means more claims, more jobless. Means less spending, means will affect the economy as a whole. Okay, and I will elaborate on non-farm payrolls and unemployment rates in a while. Okay, another piece of research you need to add to your fundamental analysis is to take note of central banks meeting. Because we are trading American index, right? So we need to know what the chairman of Federal Reserve, Jerome Powell, is discussing currently and his outlook for the months ahead. Why? To find hints of whether he will propose injecting money into the economy or cutting interest rates. Okay, so it is also good to pay attention to European Central Bank meetings, Bank of England, Bank of Japan policy meetings, because they are firstly major alliance with the United States. So with any of these alliance proposed to inject money into the economy, we were likely to see Federal Reserve Jerome Powell to take their decision into consideration and would probably follow suit. Okay, now next on the economic data list, number one, GDP. Okay, what is GDP? It measures the price value of all goods and services made in the US, and GDP reports are issued quarterly and annually. Next, Consumer Price Index. This is calculated by using the price change for the items in the basket. So changes in price in relation to the cost of living are examined. So these data, central bankers will also look into them, and they will tally all this data together and analyze and determine whether they will propose to ease their monetary policy or raise interest rates. Okay, and non-farm payrolls. Now, non-farm payrolls, let me just elaborate on this. It is actually a key employment indicator. And this report do not include employees of the government, self-employed workers, employees of non-profit groups, or farm workers. So why is that so? Generally, United States of America is an export country. They are mainly agricultural producers, as like I mentioned to you, WTI crude oil, corn, soybean, wheat. Okay, so when it's time for harvesting, they will employ a larger amount of workers to harvest their produce. Now, this in turn will tip the job data towards the heavy side for the agriculture sectors. And therefore, this is not a true reflection of the overall health of the country. So therefore, we will omit agriculture out in our non-farm payrolls. Okay, so another thing to note when trading equity indices is that many new traders will miss out looking at this one aspect, earning seasons. So recently I've done a Zoom meeting, and I've just reminded again my traders about the earning seasons, because we are in the month where they are releasing all their earnings and to keep track. So Earning seasons, what does it mean? It's the period where large number of public listed companies, which is listed on S&P 500 and Dow Jones and Nasdaq, release their quarterly earning reports. So earning from the top 10 companies in S&P 500, Dow Jones and Nasdaq, plus the current economic data of the country and any current news will determine the pace of the price movement. Okay, so majority of the public companies will release their earnings in early to mid-January, April, July, and October. So we are in the month of July, and so far these companies have been releasing their earnings for the quarter. Data hasn't been too positive due to the current economic climate. Okay, so let me just pause for a while to look at the questions. Okay, is this a form of CFD? Samantha asked. No, it's not. It's futures. Let me see. What is the difference between trading CFD S&P index versus E-mini futures? Very good question, Puifen, if I didn't pronounce your name wrongly. Okay, what's the difference? Okay, CFD S&P index predominantly and futures, the main difference really is just the contract size. CFD S&P index have very, very small contract sizes versus the E-mini Micro Futures. Okay, so the difference is also in terms of CFD, there is a holding cost, that swap points that they charge if you hold your position on a daily basis. It's something like Forex. So it's different because for futures themselves, there's no interest. The commission you pay is just as it is, no extra interest incurred. So that's the main difference. I would say I will have a fair share of traders looking at CFD S&P and futures S&P, and they do let me know that, oh, okay, CFD usually they want to do very, very short term, and they usually don't hold overnight trades, whereas for futures they will hold. It's a longer term strategy, so they will hold longer term because there's no interest incurred. So that's the main difference. Okay, and okay, another question I received is that where can I find this economic data that I've mentioned? Now, this will be made available on Phillip Futures website, and for an ease of reference, they will be made available on your trading platform also. Okay, so now comes the big question. As a home investor, which micro futures should you be trading? Okay, now if you ask around, if you have friends who trade futures, Forex, CFD, if you ask around, they will advise you to trade the product that yields in the most money in the shortest time possible. True, because most of the time I always ask my traders, you know, why do you choose this and not Dow Jones? Why do you choose Nasdaq and not S&P? And most of the time they say, oh, it's because at that moment, the probability of yielding it the most money in the shortest possible time, he will trade that. Okay, fine. Now, my answer to you is that, okay, this is for seasoned traders, which they already have their fundamentals set up in place, drill into them, you know, and therefore they can give you such advice. However, for people that is starting out fresh as a rookie, my advice to you is you need to deal with yourself first. You got to ask yourself your risk tolerance level. So why? Is because I always tell my traders, it's always easy to count your potential profits, but it's always very difficult to count your potential loss. So play the game backwards, count your potential loss now. So what do I mean by that? Let's look at the table again. Now, we have this table. I put it in 1 point. So this is the profit and loss. Dow Jones 1 point is 50 cents. So this table is very, very important for you when you calculate your profit and loss as well as your stop loss. So one way to identify your risk tolerance is really check out the average trading range of the index. So on a daily basis, Okay, so on the daily basis, Dow Jones trade on the average 40 to 100 points. Okay, so that will translate to about USD $20 to $50. Still okay, still okay. How about S&P 500? On the average, they register from 10 points to 60 points. So that will be about USD $50 to USD $300. Whoa, okay. On a daily basis, if you lose $300, it's going to be quite a lot. And these are all in USD, yeah? Okay, so what about Nasdaq? Nasdaq on the average is from 60 to 100 over points. And of course, the price will fluctuate more when there are events and key data released for the day. So that will be about USD 120 to USD $200. Okay, so part of your preparation work doesn't just consist of your background research. You need to prepare yourself on the possibility of losing this amount when you first start trading. Because only when you dive into real-time trading, then you will learn a lot from your experience and you will learn a lot about yourself also. Like you think that, oh, okay, I'm willing to lose, say, $10,000. But actually, when you really trade, you will be surprised to note that actually your risk tolerance is not that high. Okay, so moving along into the second half of tonight's training, which is my favorite. Okay, I talk about technical analysis all the time. All right, so let's look at this. All right, okay, now this is a satire, but it is probably something that I see some of my traders do initially. They overanalyze too much. As you can see over here, it's just too much. You know, because over the years of coaching all sorts of traders, I really observe that, you know, when I teach them, okay, start off analyzing on the longer chart time frame, and you know, over time, they change into start to look at every candle movement. So, you know, instead of looking at a daily chart, they start to look at 15 minutes, they start to look at 1 minute. And most of the time I ask, why do you even change? So the reason is because they have registered losses incurred. So, you know, they start to look at the minute details, you know, instead of staying focused to the longer time frame, such as like 1 hour or 4 hour. You see, trading is not about getting it right all the time. It is always getting wrong lesser. It's always like that. I always tell my clients, play the game backwards. Okay, so chart reading is definitely not difficult. All right, it is actually controlling your emotions that is difficult. And you know, most of the time, this is just a main introduction webinar to broadcast out to, you know, hundreds of audiences out there. But when I do specific Zoom meetings and you know, live web conference, we drill down to psychology. You know, because psychology makes up your being. You know, and you can get everything right. On paper, your theory is right 100%, but practical is something very subjective. And we are trying to make your practical experience as robotic as possible. So therefore, I will touch on a lot about psychology when I do smaller groups discussion. Okay, so tonight I will teach you the basic chart reading tools. If you master this proper, you will be 70% better off most traders. Okay, now, number one, to look out for when reading a chart is to look out for price patterns. What do I mean by price patterns? So price pattern is it a head and shoulders? Is it an ascending triangle? Is it a wedge continuation? Is it double top or double bottom? Okay, and then after that, we look at identifying the trend for the last 6 months or a year. Trend, is it uptrend or downtrend, or is there likely price breakout soon? Okay, so just for the benefit of audience who are new to this game, how do we draw trend lines? Essentially, just connecting two main highs or two main lows of the price movement. So I'll give you an example over here. Okay, so we have our first chart for the day, micro S&P, January to July. So roughly just take it as a 6 months contract, 6 months chart. Okay, so over here, tell me, what is the main trend? So when I do live coaching, you know, I would expect the audience to start speaking up. Okay, so but since tonight it will just be me, the lonely me, I'll be just giving you the answer, and it is uptrend, as you can see. However, let's not forget the first very fast downtrend registered in the first few months of this chart. So what does this really tells you? Okay, this would mean that price, now the uptrend price will try to test the last high of the downtrend, which is here, registered in around February, mid-February. Okay, so as you can see, the price will try to test the last high here. Okay, now let's look at Dow Jones. Okay, so you see Dow Jones, the 30 companies are included in S&P, right? So you know that the movement is quite similar to S&P movement. Okay, so analysis is also quite close to the S&P chart, which is overall uptrend, but testing the last high of the downtrend. Okay, so before we move on to Nasdaq 100, what price pattern can you observe from this chart? Is it double top, double bottom? Is it head and shoulders? What is this? So accidentally I click on the answer. It is a wedge. Okay, so a wedge means that we are expecting price to break either up or break down from the trend line. Clear so far? Okay. All right, just continue to post your questions into the question box. Okay, now for Nasdaq chart, very interesting. They have been on the uptrend for a long time, and we see no signs of retracement. Okay, so therefore, you can see that we will be looking out for the possible price retracement. And this brings me to the next technical tool, which is drawing support and resistance level. Okay, now support and resistance levels are very important. Okay, this is to dissect the chart into tradable portion, and you will make your decision based on the entry points and exit points via support and resistance levels. So these levels will act as your stop loss levels also. So what is support and resistance levels? They are essentially like that, okay, horizontal or diagonal. So why are they so important? Because they are areas on the chart where price repeatedly reverse, touch and go, touch and bounce back. So these levels are often seen by many traders, and they are hardly modified. So that means your analysis is very firm. Okay, so just to share a little bit of the history of my trading background. When I first joined a bank as a rookie, what they make me do every day is to just draw trend lines and resistance, support and resistance, just these two. And back then, 10 years ago, the technology not so great in terms of charting software and things like that. So every day I print out my chart in this huge, A5 paper, and then wow, every day, is pencil and ruler, draw, until one day when my analyst tell me that, okay, you're good to go, you can start trading. So you see, that's the reason why, because they when they look at the chart, they already can identify immediately where is the support and resistance. And therefore, I always stress this, that this is the basic ground rules you need to learn when you first embark this training journey. Okay, it's not easy. Like I said, you don't have to go through what I went through, but essentially the principle of it is know how to draw your support and resistance lines. Come to me, show me how you draw your lines, and then I can give feedback, I can give comments on it. Okay, okay. Now, okay. So back to our S&P chart. How do we draw our support and resistance level? Draw a horizontal line across 2 points at least, where the price will meet and bounce. Okay, so here are my answers. Usually I will just tell my class to do the drawing themselves, and then I'll check. But it's just me tonight. So yeah, my answer. Okay, so let's take a moment to observe. Support and resistance is when they touch and they go back. Okay, over here also they touch and they go back. Same here, very nice. Over here, okay, touch and go back. Another one over around here. Okay, and here also. Right. Okay, why do I draw all these lines? Okay, these are to assist in your trading idea. So I've covered draw your trend lines, support and resistance. What have I gathered from this 6 months contract, 6 months chart? Okay, now S&P highest done is at 3,400, lowest at 2,200, which means that S&P have been trading in the 1,200 range for the past 6 months. So the first support at 2,450, second support at 2,750, third support at 2,900, and fourth support at 3,120. Okay, these support lines are really very important because of your stop loss also. So what do I mean by that? So with all this that I gathered, right, I formed my trading idea. If close above the red line, look to long or buy at 3,180 and target sell at 3,240. Stop loss 3,150. So your target profit will be 60 points, which is about USD $30. Okay, so we go back to look at the chart again. As you can see, all right, if it breaks up, I will look to buy. Okay, because it will be trying to test the last high here. So I am more prone to buy. Why? Because overall it is a uptrend. Clear so far? So when it breaks this line, I will buy. And of course, I will look for my first resistance is over here. If it clears this resistance nicely, then yes, I will expect the price to go up back to the test the high. Okay, so this is what I was talking about. Target points, USD $300. All right, so you can know that, okay, I'm not looking at bringing in 3,000, 30,000 at one go when I trade. These are small amounts, but they accumulate. And of course, when you trade for a living, you want a daily income and not just one time, oh, huge amount and that's it. Because as a trader, we train ourselves and we practice. Really, practice makes perfect. It is true. And every day we are looking for opportunities. We are looking to bring in some money from the market. All right. So it's totally different as an investor, where they just look at overall annual yields by percentage. We look at every day on a daily basis, taking off some money from the markets. Okay, So you'll be happy to know that I hit the profit target yesterday, and so I closed my position at the target price at 3240, and I've brought in USD $300. All right. So like I said, what tools did I use? It was just trend lines and support and resistance. Straightforward, right? Okay. What about E-mini Dow Jones? Now, so E-mini Dow Jones is probably the same. And so you can take this time to draw your support and resistance levels, okay? And form your trading idea. So when you do so, once you form your trading idea, do submit them to my email and I'll take a look, okay? So far I have, these are my answers, just in case, don't copy them. Okay, what about Nasdaq 100? So very interesting. As you know that we have been, Nasdaq has been on the uptrend for a long time and no signs of retracement, right? So I will watch for immediate support level over here, and I'm watching it for it to break. So far, it's not really breaking, so therefore I cannot really put in my trade. Okay, but if it breaks, definitely you will know that I'll be looking at shorting it. Okay, so over here, just an analysis of what I've done. The highest done at 11077, lowest at 6780. No signs of testing retracement for the past 6 months. And the important support to watch is 10320. So when you really your top process, you have to go step by step. What is the highest done? What is the lowest done? Is there any retracement? What is the support and resistance level? All right, and then you form your trading idea. So like what I mentioned, if closed below the red line, I will short and target at 10,000. Okay, now remember, whenever you form your trading idea, don't miss out your stop loss level also. It's very important, especially when you first start trading. Okay, so just take note, I will short when the price break the red line and target the blue line. Right? Okay. So yes, so let me just take a while to check the question box here. Okay. So far, a lot of information that I've shared tonight, and this is just the tip of the iceberg. But don't be anxious about this, because when you open an account with me, I will really guide you through these steps again until you are able to stand on your own. So I will do my part, but I also hope that you also will persevere, do your part also. All right, so let's do a quick recap. What have we studied on technical analysis? Chart reading is about watching out the price patterns, for example, double tops or double bottom. So once you identify the pattern, next you identify the trend. Is it up or down, counter trend or breakout? Then you dissect the chart by identifying key support and resistance level. So this level will be your entry or exit points, and they will be part of your risk management strategies. Okay, right, I have one question over here. Yeah, okay. What methods do I employ when I trade on my own? Oh, nice. Interesting. Okay, let me pull out the relevant slide to share. Just give me a minute. How do I trade, if that's what you are asking? Okay, yes. So this is what I have here. Okay, now how do I trade? Okay, basically I trade on a daily basis. Okay, so I have a long term, I have the middle term, and I have a short term. And short term is really short term, as on a daily basis. So I'll just share with you on a daily basis what I do. Okay, so on a daily basis, I can control my risk involved. Of course, the nature of my job requires me to, do a lot of coaching, a lot of training. So I cannot be on my at my PC all the time. But when I do have that portion of time, I would just stay at my PC and watch the market. So I do very, very short-term trading, no holding overnight position. Okay, I do have a middle term, that one is holding overnight, but however, for on the daily basis, just taking a little bit off the market, I will do very, very short term, and I will cut my position if I'm in a loss. Okay, and so this is really only for, I will only recommend this for, really people who are just starting out, home investors, really new investors, in fact. Okay, why? Because you need a specific time to be monitoring your price, so you can't be just moving around and things like that. If not, you get a rude shock when the price, goes out of what you are expecting. So this method do not work for long-term investors. Okay, just a disclaimer. All right, so let me just pull out this example. This is the recent chart that I was looking at for in 1 hour time frame. Okay, and in addition to using support and resistance, as I mentioned to you, we use the trend lines. So we have already gathered that, okay, E-mini S&P during this period is on the uptrend. And I've done my support and resistance lines, and I know my daily range. Okay, so what do? I use MACD for smaller time frames. So to find smooth trades. Now, what do I mean by smooth trades? Smooth trades is, look at the MACD lines in this box here. Okay, you see that the blue is above the red line, which is around this one, as you can see. Okay, this is not so. I won't look at this. This is quite choppy, but this is one nice smooth blue line that is trading far away from the red line. Okay, so this type of movement would be a strong upward movement for a while before it starts to cross. Okay, so during this period of time, I can't start here, so I can see around, I can gauge around here, and I'll do a very quick buck over here, a quick trade, just a small one, all right, over here, just before it crosses. So the same thing for this one. Okay, I probably will start around here and then until here. Yeah. And also to my target is according to the support and resistance, right? My exit points also. So it's not only just observing the lines, but also to look at your support and resistance also. Okay, now you need to bear in mind such trading strategy. You have to also remember your fundamentals, such as your breaking news, or is there any economic data to be released on that day? Because if it does, then your MACD will be disrupted by a lot of noise. So in that way, you cannot trade. You cannot find any smooth trades. Okay, this works when there's no events or days. Okay, so let me see. Okay, another question is, what kind of trading platform do you have? Okay, let me see. I'll pull out the relevant slide to show you. Okay, for futures, we have developed our own platform, and it's called Phillip Nova. If you have seen our advertisements. So okay, let me just, okay, yeah, this is the one. So as you can see on the left screen, you can create a watch list for all the products you're monitoring. And at the same time, on the right screen, you can display your charts and draw your lines and add in your indicators. Okay, so the bottom panel will be your order status and open positions and your working orders. All right, so as you can see, it's very clean, and it's just designed not to, to show you much noise, and it's not going to be very complicated, and it has all the indicators that you really need, your lines and things like that, and you can save them. You can save your chart analysis. All right, and this one, this Phillip Nova, you can access it on your mobile phone too. So if you say you put in a trade on your desktop, when you go out, when it's done, it will be flow to your mobile phone app also. Okay, now for Forex itself, we will have MetaTrader 5 to cater to your needs. Okay, so MetaTrader 5, if you have seen our promotions and advertisements, so for MetaTrader 5, it's actually an upgrade from MetaTrader 4 if you are familiar with the previous versions. And we have a lot of plugins that we paid, such as Auto Chartist. And so for Forex trading itself is actually quite robust. You can also program your own trading robots to auto trade on MetaTrader 5. Okay, and so most of the time I will advise clients to download the demo platforms, familiarize yourself with the functions, and then start forming your strategies by doing some paper trades. Okay, so in that way you can engage yourself into the market and you will learn faster in understanding your risk tolerance. Okay, so far, okay, next is promotions. Currently, we are running the half price commission rates for micro futures, or half. So instead of $3, it's $1.50. And another promotion we are running is a referral program, which is refer a friend. Okay, so if you introduce your friend and after they do a trade within the first month of account opening, you'll be entitled to Sing dollars 138. So there's no limit to how many people you refer. All right. So for more information, please do contact me. Okay, let's look at the question box over here. Which charting tool to use, Silva, you say? Okay, referring to which one? You probably need to elaborate more for me. Thank you. Let me see. Xia Wen is asking, has it ever happened that you did not manage to sell in time to stop loss? What can we do to prevent this from happening? Sell in time to prevent stop loss. Okay, so that means you have to, when you create your trading idea, and once you have a position, the next thing I will always encourage new clients or new traders is that they must put in their stop loss price and their target price, their target profit. Okay, just put it in the system, let it just run. Okay, because just to, in case the market stop you out, then you won't be able to manage to sell off your position. Okay, so I hope I answered that. Okay, this means that you need to put in your stop loss lah. All right. Okay, another question is what are the requirements to open the live trading account? Okay, let me see. Okay, this is the slide here. All right, now the account opening requirement is $500. You can use this $500 to trade. Okay, so we know the S&P 500, the margin is about USD 1,003. So with this 500, you just top up a little bit more, you can start trading your S&P 500. Okay, and this is just the capital, the minimum capital that you need to activate your account. And next is the procedure. It's quite straightforward. Scan the QR code on the right side of the screen and fill up the online form via My Info. Okay, so I'll just wait here for a while, just in case some of you might be scanning the QR code. All right, so while you are deciding whether to open a live account with Phillip or not, I will really advise you that you will actually benefit more when you trade with us. You know, because so many years I've seen all kinds of brokers and brokerage, in fact, they open, they close, and you know, they merge, banks, they merge, you know, that kind. So for us, we have been standing strong for the past 40 odd years. And you know, for Phillip Futures, we have a big pool of brokers. And personally, I've trained some of our brokers, so I know where is the standard of in terms of market knowledge as well as service. So I would really is quite confident to say that we can assist you in your trading journey far better than any other brokers currently in the market. Okay, so if you do not have any more questions, now remember, you can actually send your questions to me via email. Okay, so I've come to the end of my training session. So I trust it has been a fruitful 1 hour, and hopefully I've gotten you to think seriously about trading on your own and make home trading your lifestyle. So what we do is that a link of this recording of this webinar will be made available in our follow-up email tomorrow. So if you do have any inquiry on the webinar or you want to get started, just reply to our email and we will get in touch with you. So you have been really a good, wonderful audience. I've seen so much good questions, well thought out questions for me tonight. So it has been a very fruitful session for me. Okay, so this is Charmaine, your trainer for tonight, signing off. So have a good evening ahead. Thank you.